Fed Chair Jay Powell yesterday announcing the central bank will hold rates steady for now. Joining us with reaction, former Cleveland Fed President Loretta Mester. She is also a CNBC contributor. Thank you for being here. So what did you make of the press conference? What were your key takeaways?
Yeah, I mean, they're walking a fine line. They want to basically say, look, things have been settled in a good place for the economy at this point, but we don't know whether inflation is going to resume moving down. So this is a good place to hold and wait. And I think that's what's going to be sort of characterizing Fed policy for the next several meetings. They don't have any urgency to move rates down as they were moving them down last fall because the labor market is really strong. Growth is very strong. It's above trend. So they can sort of take their time, assess things. And of course, the thing that Chair Powell did not want to talk about at all, and he navigated that pretty well in the press conference, was what was going to happen with fiscal policy. He essentially said it could go in any direction. He did mention that the staff is assessing different scenarios, but that they haven't come up with any determination. I think eventually he's going to have to be starting to talk about that because that's going to influence both the employment part of the mandate and also the inflation part of the mandate. So at some point, he's going to have to give us more clarity on how the committee's thinking about that. But yesterday was basically things are steady. We're going to keep things where they are for a while. They did take out of the statement comment that inflation has made progress. And I think, he downplayed that in the press conference. He said that was just cleaning up language. But I think it was an important change because it basically says that they haven't seen the progress they need to see. And again, that justifies holding rates steady in January while they cut in December. And I think that was really a rationale for holding steady yesterday.
Interesting. In terms of the fiscal picture, you mentioned eventually he will have to address it. What do you think he will say about it? And how can he address it in a way that doesn't go into the political discourse that he has fought so tirelessly to kind of stay out of?
I mean, I think what you have to do is really talk about how fiscal policy affects both parts of the mandate. What are they assuming about how it will affect the transmission of the fiscal policy? So you don't want them to anticipate fiscal policy that hasn't happened yet. But once they get more clarity on where fiscal policy is headed and what actually has been proposed and enacted, they're going to need to talk about what they see the impact of those fiscal policies are on the economy. For example, deportations could have a big effect on labor supply. That then affects the achievement of that part of the mandate, right? We saw labor markets very tight coming out of the pandemic, and that impacted both the maximum employment part of the mandate and, of course, inflation. So they're going to have to steer really talking about what the implications of fiscal policy are for the achievement of the dual mandate goals. And if they focus on that, I think they can stay away from the political part of it. Not to give any clarity at all about their thinking and only putting out forecasts that don't really talk about what the assumptions are, I don't think is the kind of clarity that the American public wants at this point, or that the markets would want at this point. We've seen interest rates go down on the short end, but up on the long end. And I think part of that is because the markets are concerned about what's happening on the fiscal side of the house.